Hello viewers, welcome to my channel. I am Hashim Ali Khan. Presently I am giving the lectures on the subject Income Tax 2. In this subject the topic now I have started is income from other sources. The previous video I have explained you in detail regarding the provision of Income Tax Act 1961 regarding the taxability of this head, income from other sources. So what are the incomes that will come under this head? This is called the residual head, last head. Totally 5 heads of incomes are there. Income from salary, income from house property, profits and gains of business and profession, income from capital gain, and lastly income from other sources. The first 4 heads are specific heads. So every SSC has to check whether his income fall in the first 4 categories or not. If it is not coming in the first 4 categories, then definitely it will be taxable under the income from other sources. It is the residual head of income. Any income will come under income from other source, which does not fall in the first 4 heads. The examples of incomes are interest on security, bank deposits, winning from lottery, and hire charges from letting of plant, machinery or furniture, subletting income, royalty, director's fees, examinership remuneration received by teachers, etc. So many examples we can take that may come under this head. So already I have explained you in detail regarding this provisions in the previous video. Hope my regular viewers have already watched that video. So before starting the problem, I expect that you have already watched that video. Without understanding the provision, you should not come to the problems, right? And these problems I am explaining from the point of view of assessment year 2019-20. So these provisions are applicable only for the assessment year 2019-20. For other assessment years, it may change. So before this, I've already explained you about income from capital gain. So if the viewers first time, if you are on my channel, I suggest you to visit the playlist of my channel. I have uploaded so many videos on different subjects, on different topics. Many videos I have uploaded. Just visit the playlist, select whichever subject you want, select the topic, watch the video. Definitely it will increase your knowledge on the subject. Now I am going to start the problems on income from other sources. So before starting the problem, I expect my viewers to get a hard copy printout of these problems. These problems I have provided in the link under my description. So go to the description, last line you'll find the link, take a copy, printout and keep it ready. Without these problems, you cannot understand the solution. I am reading out the first problem. From the following information, compute Mr. Rao's income from interest on securities. So SSC Mr. Rao, we have to compute income from interest on securities. There is a specific procedure, method of how to compute the income from interest on securities. Remember, securities means the bonds issued by the government and debentures issued by companies. These are called securities. Now, here 4 points are given. A, 97,000 rupees, 97,000, 12% tax-free debentures of Messrs. Raman and Company. Rupees 88,500, 15% Mumbai Municipal Corporation bonds. Rupees 25,000, 10%, 12-year National Defence Certificate. And D point, collection charges are 15,000. Now see here, how to compute income from interest on securities. So broadly we divide the securities into 3 categories. Securities which are fully exempted from tax, second tax-free securities, and third one less tax security. In this way 3 classification we have made. The first, fully exempted security, those securities on which the interest income is completely exempted, and these securities will be issued only by the government. First category. Second category, we have tax-free debentures, tax-free security. When we have tax-free security, then 2 cases are there: government tax-free security and commercial tax-free security. If it is a government tax-free security, then gross interest is equal to face value into rate by 100. If it is a commercial security, tax-free commercial security, then in 2 steps you have to calculate. The first step, net interest. Net interest is equal to face value into rate by 100. After getting the net interest, find out the gross interest. Net interest into 100 by 90. 100 by 90. So first step, calculate the net interest. Second step, calculate the gross interest. This will be applied in case of tax-free commercial security and less tax security. In case of less tax security, directly we compute whether it is a government security or commercial security. Gross interest is equal to face value into rate by 100. Now come to the problem. Computation of Mr. Rao, income from interest on security. Particulars, amount, serial number. First one, 97,000, 12% tax-free debentures of Messrs. Raman and Company. See, it's a tax-free debenture. And again, if it is a tax-free, you have to see whether it is a government or commercial. It is a commercial. Messrs. Raman and Company means it's a commercial security. So tax-free commercial security, 2 steps. The first step, net interest. Here I have written NI, stands for net interest, is equal to face value into rate by 100. What is the face value of the security? 97,000. Into rate, what is the rate here? 12%, 12 by 100. You will get 11,640. 11,640 is the net interest, but we want the gross interest. So gross interest is equal to net interest into 100 by 90. So net interest, how much we got? 11,640 into 100 by 90, 12,933. So 12,933 is the gross interest. I have taken 12,933. First point. Second, rupees 88,500, 15% Mumbai Municipal Corporation bond. It is not specified tax-free. Here it was specified tax-free. Here nothing is given. If nothing is given, always assume it is a less tax. Always assume it is a less tax. When less tax security is there, whether it is government or commercial, any security for less tax. For less tax, any security, government or commercial, gross interest is equal to face value into rate by 100. Only one step. Only one step. Gross interest is equal to face value into rate by 100. So 88,500 into 15 by 100, you will get 13,275. 13,275. So 2 items I have taken. That is, first one, tax-free debentures of Messrs. Raman. Second, Mumbai Municipal Corporation. Third, rupees 25,000, 10% 12-year National Defence Certificate. National Defence Certificate is exempted from tax security. Is exempted from tax security. That means interest on this National Defence Certificate are not at all taxable. It is fully exempted. So we will give a note. We will not take into consideration because it is exempted. We will give a note. Now take the total gross interest. 26,208 is the gross interest. From gross interest, deduction under section 57. Actually, 2 deductions, maximum 2 deductions are there. Collection charges and interest on loan taken to purchase the security. But here in our problem, we don't have any interest on loan paid to purchase the security. We don't have. We have only collection charges. Collection charges are 15,000. Subtract 15,000, income from interest on security, 11,208. In working note, I have given interest on National Defence Certificate is fully exempted from tax. That's why I have not taken. That's it. This is the first problem on computation of income from interest on securities. Now, see the second problem. Compute income from other sources. Income from other sources means you have to take all interest on security and other incomes. So compute income from other sources of Sri Vikas for the assessment year 1920. Dividend from UTI. Remember, dividend received from Unit Trust of India or mutual fund is fully exempted from tax. So dividend on units of UTI fully exempted. Then 15% interest on post office saving bank account. Again, interest on post office saving bank account fully exempted from tax. Then interest on fixed deposit from Punjab National Bank rupees 7,000. Interest on bank deposit. Interest on bank deposit is taxable under income from other sources. But it is not taxable under income from securities. This will be taken. income on interest on bank deposit is taxable, but it is not taxable under interest on securities. We have to compute separately interest on security, and after that we will take interest on bank deposit. Then 30,000 7% debentures of JCT Mills Limited. This is security. Nothing is given, so we assume less tax. If nothing is given, less tax. The gross interest is equal to face value into rate by 100. Only one step. Then second, rupees 1 lakh 8% tax free commercial security. Specifically given tax free commercial security. So two steps. First we calculate NI, net interest, then we calculate GI. The bank charges 2% commission on collection of gross interest. The banker is making 2% commission as collection charges. This will be allowed deduction under section 57. Now see the solution. Computation of income from other source of Sri Vikas for the assessment year 1920. Dividend from UTI. Dividend from UTI fully exempted from tax. Remember these points. Whatever I am explaining, you have to keep it in mind. These are the provisions of Income Tax Act. Then 15% interest on post office saving bank fully exempted from tax. Then interest on fixed deposit from Punjab National Bank separately taxable. Put a dash. It will not come under interest on security. Right now I am calculating interest on security. After calculating income from security, we calculate income from other sources. There we will take. Then rupees 30,000, 7% debentures of JCT Mills Limited. 7% debentures of JCT Mills Limited. JCT Mills means commercial security. But nothing is given. Tax free is not given. When it is not tax free, it is less tax. It is less tax. Less tax agar hai, so whether it is government or commercial, same rule, one step, gross interest is equal to face value into rate by 100. So here it is less tax security, gross interest is equal to face value. What is the face value? 30,000. Rate of interest 7 by 100, so 2,100. Gross interest is 2,100. Rupees 1 lakh 8% tax free commercial security. Specifically given tax free commercial. Two steps. NI, net interest, face value into rate by 100, 1 lakh into 8 by 100, 8,000. Gross interest, net interest into 100 by 90, 8,000 into 100 by 90, 8,889. Take this 8,889 out. Now gross interest. Take the total here, 10,989 is the gross interest. From this deduction under section 57. Only one deduction. Bank collection, bank charges as collection charges. 2% of gross interest. So 2% of 10,989, it comes to 220. 220. So total income from interest on security 10,769. 10,769 is the income from interest on securities. But it is asking you to calculate income from other sources. So here I have taken income from interest on security 10,769. Interest on fixed deposit in bank, Punjab National Bank. Here it is. Interest on fixed deposit in Punjab National Bank. It is separately taxable under income from other sources. 7,000. So total income from other sources are 17,769. That's all. This is problem number 2. Now see the third problem. Compute income from other sources from the information given below. Gift from friend. The gift received is fully taxable. So 75,000 is taxable under income from other sources. Interest on bank deposit. This is also fully taxable under income from other sources. Winning from lottery 70,000 net. Winning from lottery 70,000 net amount is given. But we don't require net amount, we want the gross amount. So we have to convert this net amount into gross amount. The gross amount is equal to net amount into 100 by 70. Because the tax rate on winning from lottery is 30%. The 30% tax is already deducted. So to make it gross, we multiply 100 by 70. Then dividends from Reliance Industries rupees 38,000 gross. Dividend received from Indian companies, domestic company is fully exempted, but up to the limit of 10 lakh. If the dividend is more than 10 lakh, then 10% flat rate of tax will be applied. But here dividend income is only 38,000, fully exempted from tax. Now see here, computation of income from other sources, particulars: gift from friends 75,000, interest on bank deposit 18,500, winning from lottery 70,000 net amount. We have to gross it. The gross amount is equal to net amount into 100 by 70. 70,000 into 100 by 70, 1 lakh. Then dividend from Reliance Industries 38,000 gross, fully exempted from tax. The total income from other sources 1,93,500. 1,93,500 is the total income from other sources. So we have completed 3 problems on computation of income from other sources. Come on, now we'll start the next problem, that is problem number 4. See carefully, 4th problem. Calculate the interest from the following securities. So we are required to calculate the income from interest on securities. So here 15% tax-free commercial security 90,000 unlisted. So 15% tax-free commercial security. When tax-free commercial security is there, in 2 steps we have to calculate. The first step, net interest. Second step, gross interest. So net interest is equal to face value into rate by 100. You'll get the net interest. Then gross interest is equal to net interest into 100 by 90. Remember, whether it is listed or unlisted doesn't matter. Only 2 steps we have to follow whenever there is tax-free commercial security. Here first one, 15% tax-free commercial security 90,000. Second, 10% tax-free Reliance debentures. Reliance debentures are also commercial. So both first one as well as second one, both are tax-free commercial security. 40,000 listed. I told you whether it is listed or unlisted, the provisions are same for the current assessment year. Then 8% National Savings Certificate 75,000. So National Savings Certificate is fully exempted from tax security. So interest on this National Savings Certificate are fully exempted. Then collection charges are 1200 rupees, 1200 collection charges. Now see, computation of income from interest on security, 15% tax-free commercial security 90,000 unlisted. This is what given in the problem. Now it is a tax-free commercial security. So in 2 steps we have to calculate. The first step is net interest. So NI, net interest is equal to FV, face value. Face value into rate by 100. Face value is 90,000. Rate is 15. So 15 by 100, 13,500. This 13,500 is the net interest. Now we have to gross it up. So gross interest is equal to net interest into 100 by 90. So net interest 13,500 into 100 by 90, 15,000. So 15,000 is the gross interest. First case. Second case, 10% tax-free Reliance debentures, 40,000 listed. Whether it is unlisted or listed doesn't make any difference. Same tax-free commercial security. So 2 steps. Net interest is equal to face value into rate by 100. Face value 40,000, rate is 10. 10 by 100, 4,000. Now we have to gross it up. So net interest into 100 by 90, 4,000 into 100 by 90, 4,444. 4,444. Then 8% National Savings Certificate 75,000, fully exempted from tax security, no tax. Total is 19,444. Collection charge, deduction under section 57. Collection charges are given in the problem 1200. Subtract, will get income from interest on security 18,244. So this is the end of the problem number 4. The only thing you have to remember, how to calculate gross interest. When 2 steps and one step. Here in this problem, tax-free commercial security. So we have to apply 2 steps. First net interest, then gross interest. And one thing, interest on National Savings Certificate fully exempted from tax. Now we'll come to the next problem, 5th problem. See the 5th one. Mr. Venkat's investment for the previous year 18-19 are as under. SSC Mr. Venkat, he is having the investment for the previous year 18-19. Our current assessment year is 19-20. So the income earned in the previous year is assessed to tax in the assessment year. तो जो भी इनकम 18-19 प्रीवियस ईयर में अर्न करेंगे उसका टैक्स 19-20 में होगा असेसमेंट ईयर. नाउ one by one we'll discuss and see. Rupees 25,000, 12% municipal bonds. Rupees 25,000, 12% municipal bonds. Nothing is given, so we assume it as less tax. It is not exempted from tax security. See here, exempted from tax security, the list is specifically given. Don't think that any security which is issued by the government are exempted. No. There are many securities that are issued by the government and is taxable. Only specifically some list is given. These are the securities which are exempted. Apart from that, other government securities are taxable. So municipal bonds, it's a taxable security. Nothing is given, less tax. If nothing is given, tax free is not given. If tax free is not given, then it means it is a less tax. For less tax security, directly gross interest is equal to face value into rate by 100, one step. For less tax, whether government or commercial, only one step. Gross interest is equal to face value into rate by 100. Second, rupees 20,000, 10% debenture of sugar company. Rupees 20,000, 10% debentures of sugar company. Again, nothing is given, less tax. It is less tax security. Same, face value into rate by 100. Next, rupees 30,000, 20% less tax debentures of Sony Company Limited. Specifically given in the problem, less tax. So again, face value into rate by 100, only one step. Then 15,000, 10% treasury saving deposit certificate. Treasury saving deposit certificate, it is fully exempted from tax security. It is fully exempted. In the theory video, I have explained you in detail what are the examples of exempted from tax security. So if you have watched that video, definitely you can be able to understand. Remember, what are the securities on which tax is completely exempted. So here treasury saving deposit certificate fully exempted. Then rupees 50,000, 20% AP government loan. Nothing is given, less tax. If tax-free word is not given, that means it is a less tax. Same, one step. Gross interest is equal to face value into rate by 100. 12,000, 16% convertible debentures of Reliance Company Limited. Convertible debentures. Convertible ka matlab these debentures can be converted into shares. The debentures which are convertible into shares are called convertible debentures. The convertible debentures of Reliance Company, nothing is given, less tax. Less tax ka matlab face value into rate by 100. Then rupees 20,000, 15% national saving certificate. National saving certificate again is an exempted from tax security. Then rupees 30,000, 20% debentures of Tata Motors Limited. Tata Motors Limited, not listed. Again, less tax. Tax free, the word tax free is not given. So it means less tax. So again, one step. Gross interest is equal to face value into rate by 100. These are the security given. Now, next paragraph. On 1st October 2018, Reliance Company Limited debentures were converted into shares. In the above information, it was given 12,000 convertible debentures of Reliance Company Limited. One of the item given, one of the investment given was 12,000, 16% convertible debentures of Reliance Company. In the paragraph adjustment, it is given on 1st October 2018, Reliance Company debentures were converted into shares. That means for half of the year, these are debentures. Remaining period, it has been converted into shares. When shares are purchased, you will get the dividend. When debentures are purchased, you will get the interest. So on this Reliance Company debentures, we take the interest for half year. We take the interest for half year because during the first half year, Reliance Company debentures. Remaining half year, it is Reliance Company shares because the company has converted the debentures into shares on 1st October. So while calculating the interest, we take interest for half year, 6 by 12. And regarding shares, we will not consider because dividend on shares are fully exempted from tax. Then on 1st December 2018, he bought 50,000 20% Bihar government tax-free security for rupees 45,000. During the year, the first investments were from the beginning of the year. All the investment just now I have read, those investments are there from the beginning of the previous year. But during the previous year, some more securities he has purchased. Which security he has purchased? Bihar government tax-free security. Bihar government tax-free security, the SSC has purchased during the year on 1st December 2018. The face value of that Bihar debentures are 50,000, but he has purchased for rupees 45,000. We are not concerned at what price he has purchased. We want the face value. The face value was 50,000. For this purpose, he took a loan of 40,000 from a bank at 12%. For purchasing this Bihar government security, the SSC has taken a loan from bank. 40,000 rupees loan he has taken from bank at 12% interest. That means he has to pay interest on loan taken from bank for purchasing the security. This will be allowed as deduction under section 57. He paid collection charges 2,500. Calculate interest on security for the assessment year 2019-20. A little bit twisted problem, and also some complications are given in the problem. So concentrate more how we are treating each and every item of investment. So we are required to calculate income from interest on securities. Now see, from beginning I will explain. So computation of income from interest on security of Mr. Venkat for the assessment year 1920. Heading you should clearly write. Now first item, 25,000 12% municipal bonds. It is given in the problem 25,000 12% municipal bonds. When tax-free word is not given, you should assume it is a less tax. Whenever the word tax-free is not given, you have to assume it as less tax. If it is less tax, for all security, whether it is government or commercial, one rule, one step, gross interest is equal to face value into rate by 100. Rate by 100. So face value 25,000, 12 by 100, you will get 25,000 into 12 by 100, you will get 3,000. So for all less tax security चाहे गवर्नमेंट हो या कमर्शियल हो, लेस टैक्स सिक्योरिटी अगर आ गया तो एक ही स्टेप, ग्रॉस इंटरेस्ट इज इक्वल टू फेस वैल्यू इनटू रेट बाय 100. फर्स्ट वन. सेकंड, रुपीस 20,000 10% डिबेंचर ऑफ शुगर कंपनी लिस्टेड. Ignore this listed or unlisted. 10% debentures of sugar company. Nothing is given. We assume it as less tax. Less tax अगर है तो only one step. Gross interest is equal to face value into rate by 100. तो 20,000 into 10 by 100, 2,000. Third one, rupees 30,000 20% less tax debentures of Sony Company Limited. Specifically given in the problem less tax. So only one step, gross interest is equal to face value into rate by 100, 30,000 into 20 by 100, 6,000. Next one, rupees 15,000 10% treasury saving deposit certificate. Treasury saving deposit certificate is a exempted security. It is not taxable, fully exempted from tax. Put a dash. Similarly, rupees 50,000 20% AP government loan. Nothing is given, it's a less tax. So gross interest face value into rate by 100, 50,000 into 20 by 100, 10,000. Next one, rupees 12,000 16% convertible debentures of Reliance Company Limited, less tax. Nothing is given, we assume it as less tax. So we calculate face value into rate by 100. What is the face value? 12,000 into 16 by 100. But these convertible debentures are converted into shares during the current previous year. In the problem adjustment it is given on 1st October, the Reliance company has converted the debentures into shares. That means up to 1st October, those were the debentures. After 1st October, debentures are converted into shares. So up to 1st October, debentures. So only for 6 months we calculate interest. Only for 6 months. So that's why I'm multiplying 6 by 12. So 12,000 into 16 by 100 into 6 by 12, you'll get 960. You'll get 960 for half year, right? Next, seventh one, rupees 20,000, 15% national savings certificate. National savings certificate is fully exempted from tax security. Then 30,000, 20% debentures of Tata Motors Limited not listed. Ignore this not listed. It's a less tax. Nothing is given, so less tax. The gross interest face value into rate by 100, 30,000 into 20 by 100, 6,000. Now Bihar, rupees 50,000, 20% Bihar government tax-free security. It's a tax-free government security. So only one step. Face value into rate by 100. Gross interest is equal to face value into rate. Because it is a tax-free government security. अगर tax-free commercial security रहते तो दो steps. Net interest, gross interest. If it is tax-free government security, only one step. So gross interest is equal to face value 50,000 into 20 by 100. But the security are purchased on 1st December. During the year on 1st December 2018, he has purchased it. So we have to take the interest for half of the year. He was not holding this security for the full year. He has purchased the debentures during the year. He has purchased the security during the year. So we take only for half year interest. So 50,000, face value 50,000 into 20 by 100 into 6 by 12. Into 6 by 12. Because for half year we are taking. Don't see the month. Because the interest is payable on the due dates, not according to the period of holding. For example, if the due date is 30th June, an investor has purchased the security just 2 days, 28th June. 30th June is the due date of declaring the interest, and 28th June he has purchased the security. So he will get the interest for the 6 months. For 6 month interest he will get. He should not say that I am holding the security only for 2 days. So here also the security are purchased on 1st December. So we will calculate the interest for half year. 6 by 12. So it will come 5,000. Now take the total gross interest. 32,960 is the total gross interest. Now deductions under section 57. Collection charges 2,500 given in the problem. No calculations. Now interest on loan taken to purchase Bihar government security. In the paragraph it is given. For purchasing the Bihar government security, the SSC has taken a loan from bank. How much loan he has taken? 40,000 rupees loan he has taken. At what rate of interest he has taken? 12%. It is given in the problem. He has taken a loan of 40,000 at 12% interest. But how many months are there? Here we have to calculate the months. He has taken the loan on 1st December. Taken the loan from bank on 1st December. So December, January, February, March. We are closing the accounts on 31st March. So December, January, February, March. 4 months. So 4 months interest we have to take. So 4 by 12. So 40,000 into 12 by 100 into 4 by 12. 1,600 rupees is the interest on loan taken to purchase the Bihar government security. So total deductions are 4,100. Deduct 32,960 minus 4,100. 28,860 is the income from interest on security. So in this problem, so many new points I have explained you in detail. So watch once or twice. Definitely you can be able to remember the provisions. Remember, students will score less marks in income tax. The reason is they will, shuffle all the provisions. They will mix up all the provisions. Specific provisions are given. The law has given specific provision. You have to remember those provisions. You have to work hard, listening, carefully listening, following. Then only. It's not an easy subject. So hope you can be able to understand my lecture. So already we have completed 4th and 5th. 5 problems so far we have completed on income from other sources. So if you are satisfied with my lecture, give a like to the video. Give your comments on these lectures. Share it in your group, in your friend circle, so that more students can watch these videos and increase their knowledge, get the confidence on the subjects. And subscribe if you have not yet subscribed my channel. We'll continue this in the next video.